Hi everyone, I'm doing this recording because I wanted to kind of talk about the differences with buying a regular sale, which means there's a seller on deed that you can negotiate the property with, and what we call foreclosed property or bank sales, which means that you are buying the property from the bank. The reason I'm doing this is because I have a lot of people who approach me with the idea of buying a foreclosed property because it is less money, number one. So they think they're getting a deal, and they could just go ahead and buy that property. They're not qualified for a lot of money, and that's the reason why they're thinking that's the best option. I want to clarify some things. When you're buying a property that has a seller that you're negotiating with, there are some things you can negotiate with regards to the actual sale of the property. Those are conditions sometimes that, you could say, Mr. or Mrs. Seller, these are some situations that came up in an inspection, for example, and I would like you to address them. Sometimes they'll address them, sometimes they'll give you credit towards them, especially if the town requires some of these things, or your mortgage required that some of these things be addressed. And this is the difference, the big difference between buying a foreclosed property. Banks are not in the business of negotiating such things with you as a buyer. And this is the reason why some of these foreclosed properties will say cash only or 203K. 203K is the construction loan that you can get where you're paying for the property and you also have money to fix the property up to the standard that the bank would like to see the property in. Without a 203K loan, you have to be buying the property cash, and then you have money to fix it up when you're ready. Now, if you're buying a property with a regular mortgage, conditions are going to be your downside, depending on the property. If there's certain things that are not on this property that the bank thinks affects the value of the property, they will not just hand you money to buy it. You have to show something that's going to be going towards fixing the property. So if you're not qualified for a lot of money with a 203K, and if you don't have cash to pay for the property, if you're going to use a regular mortgage, there are certain things, check boxes, that must be on that property. You have to, the property has to be move-in ready. And of course, we can look at some properties and tell right away that they are not move-in ready. If there's certain things that's needed on that property, certain things that make the value of that property lower than what it is supposed to be, you cannot get a normal loan to purchase that property. So I am just doing this short video to just let people understand that there are certain things that must be on that property for you to be able to buy with your regular mortgage. And those things are things that will make the property move in ready. So unfortunately, if you only have a certain amount of money, and those houses that are coming up are all houses that are bank sales, unless you have a 203K, which is a construction loan, or you have all cash, you will not be able to buy those properties. And that's why they say no FHA, which is the first time home buyer program, which is very strict when it comes to conditions of the property that you're purchasing. And it says cash only or 203K only. So I hope that helps somebody to understand that not because you have a certain amount of qualified amount of money and the property is going for that amount means you can go ahead and buy it. So if you have any further questions, or if you want this clarified a little bit more, feel free to send me a message and I'll be more than happy to answer this for you. Okay, I hope this helps. Happy shopping. Bye.